Hello friends, happy 2013. Here we are back again to the markets after the end of the year holidays and the break from trading, the vacation from trading. Back to business, and in this video it's not going to be a weekly review, it's not going to be a daily review, it's going to be annual review. I'm going to talk about my predictions, my expectations from for the most interesting opportunities I've found, and I'm talking about the long-term charts. I'm not talking about 4-hour and daily anymore. I will keep that for weekly reviews. I'm going to try and find some long-term opportunities and to talk about that. So, are you ready? I know I am. Let's begin. The first interesting pair I could find, that's a pound New Zealandian, which from my point of view is building very interesting opportunity. If we pay attention on the monthly chart, we had a monster down move from the top on 2001. After a bit more than 10 years, we got almost 20,000 pips down move. It's really strong move, and I think it's coming to the end. The question is, this is the end right now, and after this stop we are going to see a push up which will take us for something like 240 on the long term starting this year, or are we going to create a new bottom, a bottom that was never seen before, and that will go and create for us a monster monthly divergence, which then will take huge move up. Well, from my point of view, both possibilities could happen, and that's why I'm taking a look on the weekly chart. And on the weekly chart, if we pay attention, there is a very interesting, I would say, triangle. We have 1, 2, 3, 4, 5, 6 spot, and right now we have a fight of where the 7th spot is going to be. And from my point of view, well, if I have to bet, I bet up. But it's, as I said, it's a bet. And the reason for that is that I think that New Zealand cannot, based on what's happening in the world, cannot allow themselves to have strong currency, strong against other. And I think that they might go and start reducing the interest rates soon. Maybe I'm wrong, but if what I understand is correct, that's what's about to happen, and they will try to weaker their currency like every other government try to do right now. And that's why I think that it might be the push up for the pound New Zealand. A break above this triangle, a break above the very important resistance 2 psychological, which is 2 figure 20000, break and hold above that, should open the doors for the pair to start the up move, and the final station, which I can say is at least 240. My chart is dancing. Alright, now it's better. What I can see is 240, as I say. Well, this is the first pair. I think it's really worth to pay attention to. Of course, there is another scenario, as we said, and a break below the triangle, break below the 190, and a hold, clear hold below that, should open the doors probably for new lows to be reached. And then, based on monthly divergence that could be created, as we saw, there will be a huge retrace all the way up. Now, this is the first pair and the first opportunity I see. I have no idea why my chart is dancing, but it does. The next one will be also New Zealandian pair, that will be Euro against New Zealandian. after, again, same story, after a real down move, which can be well seen on the monthly chart, we are reaching right now a very interesting situation. It was a monthly bend-to-bend move. Monthly. Right now, it's making half of it and creating a divergence. Not just that, on a weekly chart, we can see very long term, well, something like that. I don't know if it's correct to draw it, but it's a wedge. And after 1, 2, 3, 4, 5, 6, 7, after the 7 it makes the break. Right after the 7 it makes the break up. And now seems like retesting that. That could be very, very, very interesting sign that the Euro New Zealandian will try to push up. And I would say that if it really hold above the 156, 155 even, if it really holds the weekly chart above and then retrace up again, of course on weekly chart, that could be wonderful buy opportunity. Our protection should be anyway below the last low, and I think that if things go correct, it could go and rise all the way up to 193 again. I'm doubtful it could happen in 1 year in 2013, but who knows? We saw surprises already, right? Many surprises in the markets. And with all the fundamental things going on, maybe that's going to be a really good trigger. So as long as 156, 155 holds, my expectations are very bullish. And yes, we can go for a daily chart and try to figure out for an entry there. And as I said, I think based on monthly chart and weekly charts, we are going up. And if my expectations are wrong right now and it goes for another new low, then this divergence will become even stronger. And after even another new low, which I don't believe is going to happen, still it could, then it's going to make even stronger up move. And well, as I said at once, I think it's time for the pair to rise. And not because I think the Europe in too good situation. That's because I think that New Zealand cannot allow themselves to stay behind, and they will have to devalue their currency as well. This is the second opportunity on my list. The next one will be, that would be the Euro against the Australian. Same story, after a long down move. We are building right now something that looks like a head and shoulders on a weekly chart. And that's why if it makes the break above this neckline, I think that could be the beginning of an up move. In other words, a break and a hold above 130, psychological 130, should open the doors for the pair to move all the way back to 154, or even, that's the high, 157, 156, 157. So there is a big room for an up move. Now that's a monthly chart. Again, huge bullish divergence, which technically could still go to create a new low, technically, but for a very long run, the chart, the monthly chart, says it's coming to its end. And once the fundamental conditions are ready, it's going to bump up and take us all the way back to 154, 157, maybe even higher. Again, there was a bend-to-bend move. Now it's building a divergence on half of that, as you can see. That's a very, very, very bullish sign. And from my point of view, it's only a question of time. And if this neckline will be broken and we will have a break above 130, we are going up. So I would say and think that we should go and try to buy the dips. If I need to go for a daily chart, there is something that looks like a wedge here, or expanding a channel, or whatever it is. We have 1, 2, 3, 4, 5. Maybe now we get a 6. Who knows, right? And maybe then it will start the pull back up. And if it makes the break below, then I think it could take us to 121, maybe 120, maybe even a bit lower, and from there that could be perfect buy opportunity. It could begin here, as I said, around the 200 moving average, right? With the hidden divergence forming, who knows? Maybe the next days will provide a buy, and if it makes the break, then 121, 120 are the levels to pay attention. I think we're going up. And again, the same reason, because I don't think that Australia can allow themselves to keep still so high interest rates while all the world reducing that. I think they will follow that and reduce and devalue their currency. That's my opinion. I will not show that, but in other words, it means that the pound Australian will also follow the pairs. So that's the first exotic interesting pairs I have on my list. Then I have the yen pairs. Well, that's very interesting from my point of view for two reasons. One, because fundamentally there are all the reasons the yen pairs will go high, very high. Second, when I say fundamentally, I mean it's because of the new government and their goals to make a very weak yen. Well, it's all clear, and that's fundamentally. So I think that we should go and look for opportunities to buy. How? Well, don't buy the straight move. That's never a good idea. Buy cycles. And if we go for shorter term cycle, well, then we have a convergence on a weekly chart and then on a monthly chart as well. We have a bullish divergence and a secret resistance number 3, even higher. We have RSI playing around the top, of course weekly chart. So from my point of view, within the next few or several weeks, it's going to create a top somewhere here between 115 maybe to up to 120. It's going to create a clear top. It's going to make a cycle probably back to 110, maybe even a bit lower, 1.8. It's a good level there technically, and from there I think this trend line, something like that, it's going to try to test it, and then most likely we're going to see continuation. And based on monthly chart, I think we can go again for something like, well, 125, maybe even 130. That's my expectations for the euro yen. Of course, same about the pound yen, making a clear move on a monthly chart. Very beautiful move on a weekly chart. It's already topping. So again, after a correction and retracing for something like the trend line or maybe a bit higher, like 135, 132, that's the range. And we have a beautiful ride here, again all dancing. After the retrace, my expectations are for the pair to continue higher. That's what I think is going to happen. And of course, well, I can go on. It's I can go talking about the Australian yen. Same story. I think it's stopping, then retrace back to I would say 88 at least. Most likely even it's going back to 86 or even lower, and then continuation, because everywhere we have very bullish signs. So every correction down should be an opportunity for us to buy. Of course, dollar yen the same, just breaks through weekly Bollinger Band. Technically it's monthly, technically it has much more to go. So after every correction down that we will get, and once we get, it's opportunity for us to look for buys. And that's dollar yen, by the way, fighting very strong resistances range, fighting RSI overbought on a weekly chart, and fighting the ride and the extreme on a daily. Well, we have been on almost in such the same situation here on 2012. Fighted it and then retraced all the way down. So I don't think it's going to be that brutal this time, but I do think it could go back to 85, maybe maybe even a bit lower to 83, not more, and from that all the way up again. That's my opinion. So in other words, right now I believe we are in front of a bearish cycle. Does it mean it's going to start right now? No. It could not do that. It could still push and play a bit higher, then make a big cycle, and then make another leg up. That's my opinion for the yen pairs. For long run, I'm bullish for them. For a medium term, I'm bearish for the yen pairs. The next thing I want to talk about will be the majors, and euro dollar and pound dollar are the main things that I want to discuss. Euro dollar is very interesting. First, this is a weekly chart. On weekly chart, that's inverted head and shoulders. Shoulder, head, shoulder. Right now, it completed a break, right? It completed a break. And right now, it's retesting the neckline. If it holds, euro dollar could turn around and go all the way up again. Something to 135, 137. If it makes it, then I would believe it's here to stay. And to stay, I mean, then it could go and start to take us, as I say, to 135, 137. On 135, 137, I think it will force very stiff resistance, like here. Okay, that's the one in between this range from here to here. Okay, resistance, and of course a divergence on the weekly chart. So if it makes the bullish move and goes to these levels, then I'll be starting to look for a sell around 137, 135, 137, or maybe even higher, depends on how deep it goes. But if it makes the break below the neckline again and takes this, oops, sorry, that's on the line, take this triangle or whatever it builds here, takes it down, that could be the beginning of the next strong down move. Fundamentally, the euro has to be weak in order eurozone could recover. Remember that. Fundamentally, strong euro is very bad. That's why I think there is room to go down. The question is when it's going to start, and as I said, there are two ways I'm looking to join it. First, the break below, and this wedge or channel, whatever we call that, or alternatively turn around, push up 135, 137 or higher with the next divergence leg. Then I'm going to sell strong. So that's my opinion about the euro dollar. Fundamentally, all the reasons say sell. Pound dollar, same story. The situation in Britain is bad, but they are working to weaken the currency. On the long term, we have a flat move. It's boring. This pair is very boring. But a break below this channel, or I'm talking about the triangle first. Break below the triangle will open the doors most likely for a down move again to the lower point. But if it does not make the break and retrace up, that could be the beginning of a potential break up again. And break up again means we can go and have a pound again around 167, 168, maybe even a bit higher. But from my point of view, the higher the pound goes, the worse it is for the economy. That's my opinion. For the down move, as I said, we need to wait for the break, and here we go. That's the lines we have, right? That's the lines we have. If it makes the break, then most likely it's the beginning of the next down move. That's two scenarios. I think if I have to bet up for a short term, then down all the way again. As I said not once, I think the US dollar is going to get stronger, not weaker, but stronger. That's my opinion, and the reason for that is very simple. Well, there is a big debt in US. Sometimes they will need to pay it. How they can pay it? They will need to pay it with US dollars, right? Just to make it very simple picture. And because of that, I think that the US dollar will get stronger. Maybe that's too simple. Maybe I don't count here all the fundamental reasons, but that's my opinion. That's the simple scenario. And again, I'm not talking about today. I'm not sure it's going to start today, but within several weeks, maybe a few months, it will. Your US dollar can go and be weaker for some time from now on, but on the long term, they will need to pay the debt. And how can they pay the debt? Only this way. That's why I'm very bullish for long run on the US dollar, while everyone else is going against me, but it's okay. And if we take a look on the monthly chart of the pound dollar, that's also a descending channel. We have 1, 2, 3, 4, 5, 6. The breakdown should come. Will that come? Well, time will tell. Technically, based on monthly chart, after the first leg down, the channel, it has to break down. Will that happen right now? Time will tell. Anyway, my expectation, I say, with the US dollar, the only question is when exactly it's going to start. About Australian dollar and New Zealand dollar, I said in a short review, I think they're going to be weaker as well. I'm not sure about the trigger. Based on monthly chart, maybe they both can go for a double top or even for a new high, and that's possible. That's possible. That's really possible in Australian for a double top or even higher. But this monthly bearish pressure is only a question of time until it booms all the way down. It's only a question of time. So the question is, could it go first and create a new high or a double top? Of course, and that's okay. But for long run, we're going for strong down, really strong down, and that's my expectation. If it makes the push up, double top at least or higher, look to sell there with the monthly divergence. But if it breaks this flat move right now here, if it breaks down, look to sell. And for long run, I have a very bearish opinion about the Pacific pairs for long run. So, well, that's the main things I found on my list. That's the opportunities I believe are going to rule for the on the forex market. There are many other interesting opportunities, like the ZAR pairs, like this one, like the ZAR pairs, which from my point of view could go now for a new high dollar ZAR, but be careful, because these kind of pairs are even the dollar Mexican, it could create a bottom and turn all the way up again. But be very careful here, because if you buy, you have to pay a big swap, and no need. Even dollar Turkish, if you pay attention, that's a triangle which could bomb up all the way. So be careful of that. I don't think you need to buy them because you pay a swap, so it's better to stay away from it. And now let's go for the next interesting things: gold, silver, and indices. Let's start with the gold. Everyone is very bullish about the gold. The thing is, really? Well, I think yes, but I think not yet. From my point of view, I've been here on a small part of this up move, and right now I think the gold could take us all the way back to this trend line, which is very close. But hold on, maybe it's going to take us much lower for the next support. And if I draw the line only between these two spots, it could take us to 1610 or even lower. So what I'm trying to say, let the gold go. Most likely it's going to create a bottom somewhere in between here, the current level, to the support range here. All of that is a range. Most likely it's going to make a stop, and then we'll start to push up again back to 200 moving average at least. So again, look for patterns here, look for the daily divergence, and once it makes it, it's time to buy. And as for long run, I keep bullish expectations for gold, but I buy the gold only with a good reason. And a good reason is not fundamentally, good reason is technically for gold. Very technical instrument, very technical. I think again it's going to make a stop in between this range to the support range with the candle pattern, with the divergence that could be and should be and most likely would be developed. Start the buys. My final stop for the gold is around 14,000. Yes, I think it still can drop all the way down there. And if it does, it will be just amazing buy opportunity. You see this line, these two spots line? Hold on, let me show you what I'm talking about. Here, you see that? That's two spots trend line. And I think the gold could go and play around and make this down move and then start all the way up again. I do think for longer run the gold has all the reasons to rise, especially because the governments are buying the gold. But on the short run it still could correct itself for 200, 300 points. If you are sensitive of such moves, don't buy the gold. Really, if you are sensitive of such moves, don't buy the gold. But I think based on daily chart, it's good time to start, get ready, not yet, but get ready to collect the gold again from the bottoms. That's my opinion. The same about the silver, of course. I think we're going for a bottom. The bottom could be 28 plus, the bottom could be 26, and based on, here we go, you see that? That's the spot. Based on a weekly chart, we can go into 25 and 24 to find a buy opportunity. And again, exactly as for the gold, we have 1, 2, 3, 4, 5 right now. I think it's going to make a stop. Look for a divergence, look for a bullish candles on this support range, and that's your opportunity to buy. First target could be these spots, this two line trend line, okay, something like that move. Okay, for long run we can go all the way for the big trend line, which means 32 or even higher. So that's my opinion for this silver and the gold. Look for buy opportunities. And what do I think about the indices? Well, that's a wonderful story. Technically, there is a reason for continuation higher. Technically, do I believe that? No. I think the situation in USA looks good. First of all, it really looks good, but it looks good because of all the money involved. So actually, the market right now is a Fed market. It's all the money involved from the Fed. The thing is, when the Fed is going to stop his purchases, Some analysts say already it's going to stop on 2013. Some say no way before 2015. These rumors that he is going to stop somewhere will not contribute to the market, and I think that for long run, let's not take a look on daily. Let's take a monthly. If it creates a new high, and it could, I'm talking about Nasdaq, but it's relevant for Dow and S&P and whatever it is. Just watch each of them. There is a monster divergence on a monthly chart. Every new high will be fake. That will be fake printed money. It could go there. Don't get me wrong. It could go there. But it's fake. It's fake money. And once people, the real traders that should make the market move up, will see the Fed stop buying, I think the panic will control again the market, and we will get a strong drop. So from my point of view, we should get ready to look for sell opportunities. The trigger could be after the first NFP, which is today, in 1 hour and 30 minutes. But again, as I said, if we get an up move, let it go. I would never join that, because I think it's fake, and I think it will be limited, even though it could create at least reach the previous highs, maybe even create new highs. I would stay out, because I don't believe this. I don't believe, based on monthly chart, I don't believe this move. Yes, it could push, but if it does, it's about to crash right after that. Unfortunately, I wish I would be wrong, but that's what the charts are telling. Nasdaq, Dow, and S&P, they all say the same. And that's why, unfortunately, as I said, yes, it could go for the new highs, or at least last highs. It does. It could create new highs, but it's fake. And with all the really behind the scenes bad fundamental reasons coming in USA, I think it's only a question of time until we get a real drop down. But once again, and it's important to remember that I still think it could go for new highs. Same with the DAX, by the way. I think it could go for the last high, maybe even for a new high. But again, the monthly divergence is here, the weekly divergence is here. So if you believe that, buy. But be careful. Be careful. It does not look good. Whenever the time comes, fundamental time comes, and this divergence starts the effect, it's going to be strong. I know I sound pessimistic, and I know you have heard that from many other analysts probably. I just say be careful. It's your money. Yes, it could go higher. Yes, it could rise a bit. Yes, it could create new highs. But if you believe printed money, what can I say? I don't. And that's why I will be looking for the highs to sell. I think it's only question of time. Only. And what's going on right now with this divergence, the long, big divergence, reminds me the 2009. Remember that? After the rise up, we got the divergences. It played around, then another push up, and then boom, crash all the way down. So, unfortunately, I do think it's in front of us once again. I'm not convinced it's going to start right now, as I said, but I think it's fake. And when this fake will wake up, this fake situation will make everyone wake up, it will drop like a rock. That's my opinion. And that's why I prefer look for sales, not buys. And with that, I think that could be great opportunity on some other commodities. And for example, this is the soybean. This is a weekly chart from soybeans, as you can see. There's a head and shoulders here, but from other side there is a beautiful trend line right here. Now this head and shoulders could be broken and take us down to 1250 or so, maybe even a bit lower, but start to pay attention for the weekly divergence. It's going to make it, and I'm going to start to look for the buys from the trend line and from the support here. Whenever it makes the stop with the divergence, with candle patterns, I'm going to start the attack. But I warn you once again, if you are sensitive from 100 to 150 or 200 points, don't trade the soybeans, don't trade the commodities. For long run, I think it's going to create a bottom and rise all the way up again. And that's my opinion for the soybeans. Buy the dips. Same about the sugar. I think if we take a look on a weekly chart, there's monthly divergence. Yes, it could make a new high, and I think it even might, and it would be good if it does. And then from something like 1650 or 15 even, with this huge monster divergence, it would be a good idea to start look for a buy, and then most likely we are going all the way up to 22, 23 for the sugar. But if it does not make the down break, then pay attention for this triangle or whatever you prefer to call that, and if it makes the break out of that above, that could turn to be a beautiful buy opportunity. So again, buy a new low if it reaches it, or buy the break out of this pattern if it makes that. That's two ways to trade the sugar. And the same story from my point of view with the coffee. I think it's creating a bottom. It could be here, or it could be the next support. It is creating a bottom, and there is a monster divergence, and it's only a question of time until it makes it. So from my point of view, we can start to collect it, and if it pushes for new lows, perfect. Buy more, because it's creating a real bottom. And again, if you're sensitive of moves that are going against you at the beginning, just ignore this recommendation. Just ignore this recommendation. It's not for you. If you are sensitive of holding some drawdown against you, avoid this type of trading. For like investing, I think it's a wonderful opportunity, and I think coffee could rise again to above 200 for long run. And if it does go low again, perfect. There is a monster divergence on weekly, band to band move on monthly with the beginning of divergences. So we are creating a bottom, and it's pretty clear. It's pretty clear from my point of view. Well, that would be all. These are the main things I'm going to concentrate for long run on 2013, at least 2013. And just one small tip with all the fundamental things going on, and the picture is not clear. The financial situation worldwide is not in the best mood and the best conditions. Stay safe. Don't take huge risks. Keep it slow and enjoy the opportunities we have. Don't try to force the market to do things that it should not. Try to enjoy the opportunities that it should do. That's all, friends. Thank you very much for watching this video. I know it's been a bit long, but well, I've had many things to talk about. So once again, thank you for your time, and I wish you really wonderful 2013, good trading and good personal life, and I wish you all the best. Thank you very much. Once again, yours, Vladimir.